All right, stocks in Asia were mixed today amid concerns over the state of U.S.-China trade negotiations. Japan's Nikkei 225 shared 0.53%, while the Topix index also declined 0.23% to end its trading day at 1,696.73. In South Korea, the Kospi closed 0.34% lower at 2,153 points. Mainland Chinese stocks were higher on the day. The Shenzhen Composite gained 1.831% to about 1,646.8, while the Shanghai Composite was 0.85% higher at around 2,933 points. Hong Kong's Hang Seng Index added 1.38% as of its final hour of trading, with shares of Hong Kong exchanges and clearing surging beyond 2%. The ASX 200 in Australia advanced 0.7% to close at 6,814.2 points. And U.S. stock index futures were higher this morning. At around 1:30 a.m. Eastern Time, Dow futures rose 28 points, indicating a positive open of more than 29 points. Futures on the S&P and Nasdaq were also pointing to a slightly higher open. On the data front, there will be housing starts at 8:30 a.m. Eastern Time. The House Permanent Select Committee on Intelligence is holding its latest open hearing as part of the impeachment process into President Trump, starting at 9 a.m. Eastern Time. In terms of earnings, Home Depot, Medtronic, and Kohl's are due to report. Okay, let's look at the global oil market there. Oil prices fell for the second straight day today amid market jitters over limited progress between China and the United States on rolling back trade tariffs, while rising U.S. inventories also jangled nerves. West Texas Intermediate crude reported 0.47% to $56.78 a barrel, while Brent crude futures were down 0.32% at $62.24 a barrel. The lingering trade battle that has seen the world's two biggest economies impose tit-for-tat tariffs on each other has hit global growth prospects and clouded the outlook for future oil demand. On the metals market, gold held steady early today after hitting its highest in over 1.5 weeks, propped up by doubts about a trade deal between the United States and China. Spot gold was little changed at $1,470 per ounce, while U.S. Gold futures fell 0.9% to $1,470.50 per ounce. Elsewhere, silver inched up 0.06% to $17.03 per ounce. Palladium fell 0.2% to $1,733.60 per ounce, and platinum rose 0.2% to $895.84 per ounce. And away from the markets there, back here on the African continent, the African Development Bank and the African Union's Africa Openness Report 2019 has ranked Nigeria and South Africa as some of the nations that make it difficult for prospective African travelers to secure entry visas. The report, which ranked Nigeria 30 and South Africa 35 among 54 countries, has Seychelles and Benin Republic top on the list due to their no visa policies, followed by Senegal, Rwanda, and Uganda. According to TP, the report, championing greater visa openness across Africa, will help to capitalize on the gains to be realized from the launch of the African Continental Free Trade Area, the Single African Air Transport Market, and the Protocol on the Free Movement of Persons. And Ghana and the United Arab Emirates have signed 5 cooperation agreements and memoranda of understanding in different sectors of their respective economies aimed at deepening the ties of cooperation and the bonds of friendship that exist between the two countries. The agreement include an MOU on exemption of entry visa requirement, agreement for the promotion and reciprocal protection of investments, an agreement for the avoidance of double taxation and the prevention of fiscal evasion with respect to taxes on income between the government of Ghana and the government of the UAE. The others are agreements between both governments in the field of manpower and cooperation and mutual assistance in customs matters. And Zimbabwe's central bank has cut its main lending rate to 35% from 70%, joining the finance ministry in efforts to revive an economy hobbled by years of mismanagement. The decision reverses a move by the Southern African nation's newly formed Monetary Policy Committee, which raised the rate from 50% in September. The governor of the central bank, John Mangudaya, says rates were cut as the MPC emphasized the need for the bank to put in place measures to fund the productive sectors of the economy by redirecting excess liquidity in the financial system. All right, let's take a break now. And when we come back, of course, we look into the domestic commodities market space as well as other stories there. To stay with us.